Awesome. Well, welcome everyone. Have some of the top VCs here for an exciting discussion today on crypto and what they're focused on. So I guess to kick it off, quick intros. Joe, you want to start?
Yeah. Hey, everybody. Joe Bruzzesi. I'm a general partner at RW3 Ventures. We started RW3 3 years ago in partnership with a big family office called the Raptor Group. One of our leading investors is Mubadala, sovereign wealth fund of the UAE. I was one of the first advisors to Ava Labs and Avalanche when it was just 3 or 4 people. And before this, I ran the Americas at BitGo.
Hey, everyone. Anjan here. I'm in the ParaFi Capital. We're an investment firm that's focused exclusively in the blockchain space. Been around for 7 years. We run token, equity, credit, and technology strategies. Very early investor in a lot of the leading DeFi protocols and been around the Avalanche ecosystem for a couple of years. So excited to be here.
Hey, everyone. Rob Hadick here. I'm a general partner at Dragonfly. For those who don't know us, we're about $4 billion under management, a VC fund primarily focused entirely on crypto and blockchain. We also own a liquid fund called Metastable, which was actually a seed investor in Avalanche. So we've been around the Avalanche ecosystem for a really long time.
Just quickly on myself, Matthew Potts, focus on liquid at CoindFund. CoindFund is a venture seed and liquid fund. So I guess to kick it off, guys, where do you see or what do you see the role of crypto VCs in 2025? Rob, you want to start?
Yeah, I guess we could take a few different directions. I think, interestingly, right, you look at Twitter right now, and there's like a lot of kind of anti-VC sentiment that seems like online. Mostly, it's like completely misplaced and kind of misunderstands market structure. But I also think what is true in crypto is that there is a token means that you get very early liquidity, which that very early liquidity often has misaligned incentives. And that misaligned incentives has meant that a lot of the quote-unquote VCs in the space are essentially just trading shops or prop shops that are completely unaligned with the founders or the projects themselves that are good actors. And the actual role of a VC, if we look at the history of capital formation, is to be, one, a capital provider, but two, just a trusted friend, confidant, somebody that you call on a Saturday when shit's going badly and it's breaking and you're trying to figure out how to respond to it or how to go and do public communications, how to do things like that. All of the other stuff we talk about VCs doing, they don't really need to be fucking doing, to be honest. And you don't need me to help run your business. You need me to be helpful when you want to pick up the phone and call. But two, all of the trading that goes around it and the LPing and things like that, those should be different people. They should not be the same market participants as the VCs themselves.
Yeah, if you look back over the past couple cycles, in 2017 in the ICO days, you had a lot of small crypto funds that were just flipping SAFs, flipping tokens post TGE. The asset class has matured quite a bit over the past couple of years. So now you've gone from these small crypto funds to really these investment platforms where funds are doing liquid tokens, equity. Maybe they're running validators on your network. Maybe they're providing liquidity as well. So the job of a crypto VC has definitely changed over the past couple of years. I think on a day-to-day basis, crypto VCs can actually do a lot more harm than good if you're not careful. To Rob's point on the token side, but even just finding product market fit. I don't think VCs are the best in terms of telling you, super talented founders, hey, you should build in this direction. I think they can give you guidance. But I think the hit rate is not great amongst most crypto VCs. It's really hard to predict where the puck is going. So I think crypto VCs, can be very helpful on, thinking about business models, your next key hires, help with fundraising, be a sounding board when you're thinking about these core product ideas. But if you're not careful during board meetings or executive meetings and you let, VCs kind of guide your overall product direction, you can kind of lose your voice. So that's, maybe just some advice for the builders in the room.
I think I agree with a bunch of those points. I mean, from our perspective, we really focus on a few things. The first is storytelling. I think one of the big challenges that founders have in this space is being able to distill their story to investors, to potential customers. I mean, no matter where you go, it could be Fortune 500 companies. You could be talking to major LPs and funds. I think most people to this day would have a hard time even telling you what a blockchain is. So I think a lot of these founders come into this space, they maybe have really deep domain expertise, and they've found a way to build on blockchains. And for them to actually tell that story effectively, I think is really hard. So we spend a lot of time helping there. And then I can only speak from the RW3 and Raptor side of things, but we're 1 degree of separation from just about anybody that people want to meet, both in crypto and in the real world. So I think where we make early stage investments, one of the things we try and do is really collapse the amount of time it takes for people to get to the customers and investors they want to meet.
Yeah, and Rob, I think just to dig in on something you said on the criticism and the tokenomics, right? Coming from the liquid side, a lot of the criticism I hear is we can't have an alt season because of the VC overhang, right? What do you think about that? Like, is that criticism valid? And secondly, as you all do lead deals, are you factoring that into the tokenomics that you're doing? Is that a consideration? Or is it more of a team and tokenomics problem, not a VC problem?
Yeah, I mean, it's pretty clearly not a VC problem, right? Like, it is a incentive alignment problem that exists for everybody, right? So the founders feel that their incentives are to launch tokens at a high valuation. They raise rounds and capital at high valuations because they want less dilution, and so then they also want the VCs want them to launch at a higher valuation. The exchanges want to list them at a higher valuation, and they are taking a bunch of the tokens as some sort of reward or incentive for that. The market makers are taking loans, and they are incentivized if the token value is higher. So everybody in the whole ecosystem is incentivized for this token to trade highly at first, right? And then they unlock and then they sell these things, right? The reality of that is that the way we have designed typical token economics is batshit. It's really silly, right? And we need to be more thoughtful around how do we align long-term incentives, not short-term incentives. How do we figure out a way to make sure that everyone is swimming in the same direction and building a product that is meant to be used over many, many years, as if it is a business and not just a piece of technology where the token itself is the product and then we're going to go dump it and make some money and go to some Formula One races afterwards or whatever, right? And that's what too much of the industry has been. And so I think, one, it's okay, well, how do we redesign, unlock investing schedules? How do we make sure that, there's not just necessarily these shelling points or cliffs where everyone is just selling? But two is how do we figure out a way to bring more of this ownership back to the community? Because things like, oh, well, there's only a 10% float or 15% float. By the way, that's the same exact float that you get in the public markets, right, in equities. That is not a weird amount of float to be out there. What is weird is that we don't feel like we have a long-term reason to be investing in this thing, and there's no kind of fundamental reason or that we believe that we're going to get value back in the future, and so we're all racing for the exit. And so it's really about, okay, what do you guys build that has long-term usage and that people want to be a part of and that is going to add economic value? And then how do I align the incentives with the rest of us? And we all collectively bear the responsibility for that. So it's not a VC thing, it is an everybody thing. And on top of that, how do we get retail and the incremental buyer into the space? If you look at volumes on chain today for alts, there is just no volume. It's not there because there are no retail users buying these tokens, and there's too many tokens for too many projects that just don't have a lot of usage. And so it's really a market structure broad problem that we all bear the responsibility for.
Yeah, I think a lot of this comes down to just having product market fit. If you have a good product that has product market fit, has usage, the token itself can be figured out. If you look on CoinGecko today, putting aside meme coins, 10,000 plus tokens, how many of those tokens really need to exist from first principles? Probably less than 1%, right? So if it's less than 1%, what's the actual use case for a lot of those other tokens beyond just existing and serving as a form of liquidity for everyone involved? I think there are probably too many teams that are launching tokens that don't actually need to launch tokens. So I think going back to the first question, one of the jobs of VCs is to also push back and say, hey, maybe launching a token isn't the right thing to do because you may destroy long-term value for the company or the product. But if the focus is, let me build the highest quality product, and then if and when it makes sense, let me launch a token, I think those projects end up doing quite well longer term. If the focus is, hey, let me try to play this token game, there may be money to be made, but it's very PvP, and then a lot of people end up losing money, and then there's this backlash. I think one of the as we think about moving forward, what can be done, I think transparency is a big one. I think a lot of people are kind of saying exchanges should self-police or VC should self-police, but that's not how incentives work, right? You have to have a very strong market-based incentive for the top projects to rise to the top. And the way that works is through transparency, right? So if you go launch a token and you're very transparent, here's our unlock schedule, here are the certain wallets for foundations, market makers, whatever it may be. Here's the exact structure of the agreement, right? When you start to add this level of transparency, that builds confidence in the public market. So then you not just have retail investors coming in, but also sophisticated liquid pools of capital who may want to come in and actually get involved in your token, but don't know, is this a real price? Is this something we actually want to step in? So transparency, can really help solve that. And whether that's on the exchanges or whoever, we can have a broader debate. But I do think over the past couple of months, you're starting to see kind of steps in the right direction. And then hopefully with that, you get more sophisticated pools of capital coming in and not just retail. Because at the end of the day, you want longer term holders for a lot of these tokens.
I actually agree with a lot of things you said there. I'm working on something right now, a simple blog post that I think actually answers a lot of these questions. And it's really titled, "Is any of this shit real?" And I think a lot of it is just, we live in a space right now where lots of money was made in the previous cycle, 2017 to 2019, seeding what is now some of the best infrastructure, Solana, Avalanche, et cetera. And as those strategies have been tried to be recycled in the current market cycle, they're bumping into a few things. One is that a lot of this stuff is vaporware. I think a good example, I got in a little bit of trouble for calling out Aleo last time on this panel, but I'll call out Movement Labs on this one. I think that's a good example of vaporware. There's a lot of these projects where they raise money at super high valuations. They launch with minimal product market fit or users, and everyone's like, well, why aren't the valuations going up? Why aren't these token values going up? And I think it's both a function of the fact that most of this stuff doesn't actually need to exist. And separately, when you look at the supply and demand dynamics of crypto right now, the amount of new tokens being launched is massive. The amount of inflation that's coming every day from staking rewards, unlocks, et cetera, is massive. And the amount of capital that would have to come in to see the same type of performance you saw in all the previous projects would just have to be a lot more significant than it is. I think a lot of this will resolve over time, and I think what really matters for the space and for VCs is actually just funding real businesses with revenue, cash flow, et cetera, that don't need a token to exist in the long run.
Yeah, so Anjan, you touched on this in the beginning. VCs can't do everything for a project, right? So where do you think founders are overestimating what VCs can do for them? Like, what's that one area where founder comes to you and it's like, I can't really help you here? Like, where is that?
Yeah, I mean, I wouldn't say it's like binary, VCs can't help, but I'll go back to kind of my earlier point on finding product market fit. Like, I see a lot of founders, they went through the bear market after FTX collapsed and they're looking for new ideas, and they may turn to VCs like, hey, I'm thinking about this, I'm thinking about that. And again, VCs can be a helpful sounding board, but I don't think they should be the ones really determining your product direction. I think it comes down to what does the market want? So staying close to the product and customers, right? What's the feedback from customers? Do they like this general direction? Is there appetite to actually pay for this product? What are the competitive dynamics? Staying very close there and drowning out the noise is super, super important, especially in crypto, right? So if you look back in 2021, there were DeFi founders who were suddenly doing NFT startups and gaming companies, right? Then you had, the bear market that washed out a lot of the vaporware, and then you start coming back and, well, now let's do something in meme coins. Oh, AI is hot. Let's explore that. Farcaster raised this crazy round. Maybe we should explore decentralized social. So, these are the conversations I'm seeing some founders have where they're constantly kind of going back and forth. I'm getting swayed by what's going on in the market, whether it's a new listing that takes place and suddenly the token price is at some crazy valuation. All of these things can be very dangerous in the long term. And there are VCs who may even push like, hey, you should pivot to XYZ vertical because it's hot. Well, why do they think it's hot? Well, maybe they can launch a token because there's some random comp on Binance listed at that level. So getting out of this kind of echo chamber, I think is really important. And again, if you go to your VCs or your board and you say, hey, I spent the last 6 months iterating on this product, here's a data-driven approach on why customers like it, why they're willing to pay for it. Here's a competitive differentiation. I think VCs can be a very helpful sounding board.
Yeah, I want to answer a slightly different question. I'm sorry about that, but it comes, it's in relation to what you just said. Is I see a lot of pitches, and I'm going to bring up one specifically, so hopefully the founder's not in the room, but he was actually a very smart guy. But he basically was like, listen, I'm building a verticalized, like virtuals competitor for AI agents that are going to do payments for dentists. And I said, why? Like, what is the point? I don't really understand this. And he's like, well, I've talked to some AI VCs and they're really into, kind of verticalized agentic marketplaces right now. And they believe that like, this is the future. We're going to have an agentic economy. I was like, okay, I understand. And then I've talked to some others and he had a payments background and they believe there's going to be agentic payments that are made. And then I dug into his background a little bit and I was like, well, what are you actually passionate about? And it had nothing to do with any of that. And the reason he was building that, as we talked longer, was because he thought that it would resonate with the VCs. And I'm telling you right now, if that is the way that you approach trying to build a business or a market, you will lose. That is not how it'll work because it is not your life mission. It is not the thing you're passionate about. You won't wake up in the morning and say, this is what I'm going to do for the rest of my life, and I'm excited about doing that. If that's not the case, then you're not going to be successful. And so what you need us for is to be a really good confidant and to be a really good partner for you and to stick with you thick and thin and be a capital provider. What you don't need us for, and it is always going to be you moving in the wrong direction if you're trying to use us to be the person that tells you where you're supposed to be going.
Yep. And I guess focusing now more on Avalanche, no ecosystem is perfect. Avalanche has its criticisms, right? Which of these do you think hold merit, and what is the ecosystem doing to address them?
I think I'll start with this one, and I feel like I've been saying this for a long time. I feel like very much in stealth, Avalanche has been killing on the business development side. If you are very close to the ecosystem, you'll know things from Gunzilla, MapleStory, Apollo, go down the list of all the things that we've probably talked about over the last 2 days. I think one of the problems it has is really narrative in the market. Whether I'm talking to people in crypto, to potential investors in my fund, they all very much know Bitcoin, Ethereum, Solana. I think those kind of dominate the mind share in a lot of ways. And when you talk about Avalanche, like they have no idea like all this great stuff is going on. So I still think to this day, years later, after I probably said this last year and the year before as well, I think there's still a lot of wood to chop on having a better narrative and having the market understand like there's real things happening here. And in my opinion, like significantly more real than basically anything that's happening in any other ecosystem.
Yeah, narrative is a big one. And just to go one level deeper on that, I think like if the question is, okay, how do you now convey this narrative and get people excited? If you look at what Ethereum, Solana, even Base to some extent, have done over the past couple of years, it's not hiring PR, or maybe they are in the background, but the primary way is not just hiring PR agencies and being active on Twitter. It's getting people excited about the products that are on the chain. And it's not hundreds of applications. It's 4 to 5 high-quality applications. Whether you like Pump.Fund or hate Pump.Fund, they're a massive force, right, in terms of volume and users, whatever. So you have to make it as easy as possible to use Avalanche. And a common question I get from investors or builders is, what's going on with Avalanche and how do I use the products? Right? Do I go and use the C chain? Do I go use one of the 50 L1s? How do I navigate across those different chains? I know the Core Wallet's doing a much better job of that today. But it's also hard to figure out what's actually going on in the ecosystem. So I think if Avalanche, and maybe it's the core team or other wallets, creates just the best discovery mechanism where, hey, I want to do stuff on Avalanche, what's going on? I download Core, and it's very easy for me to see, here are the new apps/L1s I should figure out. Obviously, all the interoperability stuff is abstracted away. I don't have to, everyone here has probably used Ethereum and Layer 2. It's like, let's learn from that. It's such a garbage UX, right? To go to different L2s, click change network, figuring out one of 4 bridges to move my assets over, hope I don't get hacked along the way. I mean, it's a mess, right? So there's a lot we can learn from and realize that doesn't really work from a marketing and user acquisition standpoint. So let's make it super easy in this core app. And then I think the second, third order effects of that is now that people can try and use these very high quality applications, builders come over because now there's a way for them to actually target specific users. And then the market and broader users and institutional investors, whoever it may be, actually understand what's going on in the ecosystem versus, I get this question probably every week, what is going on in the Avalanche ecosystem? And it's not easy for me to answer that unless you're in the weeds, which is, a problem. But I think the Avalanche and the core team are making some good strides there.
I'm going to take a little bit of a different tact, which is, I think there's a lot of good points that were made there. But blockchains are essentially a financial ledger, right? Like they are best used for finance. And at the core of everything that we're talking about in terms of tokenization, the core of everything that we're talking about, and to even some of the robust ecosystems that you have with like a MapleStory or a Gunzilla, is a robust financial ecosystem, or DeFi, right? And we're seeing it right now with even like, okay, so on the tokenization side, Apollo is doing this thing called ACRED, and they're doing a looping strategy on Polygon. It's got a lot of people very excited. Hopefully that will come over to Avalanche as well. But I think we're starting to see, or at least I'm seeing in my conversations, an acceleration of excitement around putting like tokenization in DeFi, an acceleration of excitement around doing new financial primitives in DeFi and how they can kind of operate as a different form or a better form of a financial rail for a lot of the things that we would be doing otherwise. Stablecoins is the same thing, payments on chain, but you need DeFi for that. And for a lot of the DeFi founders in the room, and hopefully there's a bunch of you, right now, I think Avalanche has probably let you down on a relative basis to tokenization or gaming or some of the other things where they've been really well known for. And that's the area that I want to see Avalanche really lean into. There's no reason that Avalanche should be 9th in DeFi TVL, should be 12th in fees, should be, I think it's like 10th in stable coins for the technology that it has and for how good of a platform it is. And so, for anyone in building a DeFi or thinking about building a DeFi, please build here, build new financial primitives. That's what I want to see. I think that's where, and that will help the rest of the ecosystem of Avalanche.
So if you're running the foundation, how would you allocate money to support that? Putting you on the spot here.
I mean, listen, and they're trying to figure out how to do this and close to the foundation around incentives and business development and bringing in the best developers but I think at the end of the day, incentives only go so far. I think we've seen it, right? Things like PYUSD throwing a bunch of incentives into Camino pool to like try to ramp up the amount of PYUSD in those pools on Solana. The second those incentives go away, it got cut in half, right? We see this a lot. What you need is a really robust developer ecosystem. You need people who want to build there. You need liquidity, and if you bring that, it becomes a flywheel, and it develops and it helps everyone else in the ecosystem. So I think getting back to that kind of first principles, DeFi is what makes the rest of everything work, is I think the way that we need to reorient ourselves for all blockchain builders, in my opinion.
So when you look out across the ecosystem of Avalanche, and Rob, you touched on it with DeFi, are there any other areas where you feel the ecosystem has been underserved, either through capital, talent, or tooling?
Yeah, I mean, maybe this is more contrarian, but I think you just double down on the stuff that's working versus trying to, go out and compete in 10 different areas. Like as I think about blockchain and AI, I think there's a lot of really exciting stuff, but what's really working today, what really has product market fit, it's only a couple of verticals, right? It's DeFi, it's tokenization. I mean, stablecoins and payments, this is the hottest narrative, and I would say it's still understated in terms of its potential. Right? So why can't Avalanche become the home for new types of stablecoin / payments chains, right? So if you're a fintech that wants to launch your own stablecoin, does it make sense for you to explore your own Avalanche L1? You have the full stack integrated within the Avalanche L1. Maybe it's KYC, maybe it's permissioned, you have compliance built in, right? You have super low fees. Maybe it's focused on B2B payments, remittances, whatever it may be. There's all these payments and fintech related opportunities that I think Avalanche should triple, quadruple down and win there. Look, could Avalanche do more in DePIN? I mean, sure, could Avalanche do more in AI, but what will drive the most amount of fees, usage, what has real traction and product market fit today? I think it's stablecoins and certain elements of DeFi. Rob mentioned, making RWAs more useful. I mean, right now across the board, you look at RWA TVL, or you look at the number of fintechs or banks that have announced, hey, we're tokenizing XYZ. I'm super bullish on RWAs, but I think a lot of that stuff is nonsense, right? It's not just about tokenizing the assets, but what can you actually do, right? So if Avalanche becomes the place where the assets are actually traded, or you can get leverage on them, or they're fractionalized, or there's an integration with stablecoins, that's actually something brand new versus, hey, I'm just going to hold BUIDL on chain, but it's less liquid than Fidelity or anything else. There needs to be that unlocking the new primitive. So look, I'm excited about AI. I'm a little bit less excited about gaming, so I think Avalanche should just double, triple down on DeFi payments, stuff like that.
maybe I would. I feel like this has been like kind of negative of a panel on Avalanche for an Avalanche conference, and I think I want to make the point or reiterate that I think the reason we are all here is that we're actually very excited about Avalanche, and I've been involved in the Avalanche ecosystem for a long time, and I think they've done a lot of this stuff incredibly well. Like the gaming, there's only one chain that is working for gaming right now. It is Avalanche, right? What we've seen out of MapleStore and what we've seen out of Gunzilla and others, and the tokenization side and the kind of the institutional side has been incredibly well. But what at least I believe, and part of the reason that we're having this conversation is that Avalanche has really, really fantastic technology that should be doing even better than it is today. And that's why we're I think, having this conversation about, okay, what can it be doing better?
Yeah. And I guess looking forward to the next summit, like what's the key metric you're focused on to make sure the ecosystem is on track and we're seeing this growth? Is it new L1s? Is it user activity? Is it DeFi TVL? Like what's the key metric you think is most important going forward?
I think it'll be having hopefully multiple subnets or L1s that have, call it 1 million monthly users or more. I think Gunzilla, MapleStory right now, at least in my mind, are the front runners to do that. We actually have a really interesting K-pop company that's going to launch on Avalanche as well. So I think this ecosystem really only needs 1 or 2 of these L1s to prove that this model makes sense. Launch your own blockchain. I think it's well on the way, and I think if we come here next year and even just Gunzilla itself has 1 million monthly actives or more, that would be a very bullish sign to me.
Yeah, a lot of, as I think about metrics, there's the kind of vanity metrics that a lot of people are focused on, TVL, active addresses. I do worry about the civil resistance of a lot of those metrics, right? Because overnight people can spin up L1s and kind of bump up L1 active addresses, or if you deploy a bunch of AVAX into a certain L1, then suddenly TVL goes up. I think those are important, but I do worry, like, okay, a couple years from now, are those the metrics that Avalanche will be tested versus, let's say it's REV or fees. I think stablecoin volume could be very interesting. Again, you have to be careful about like the wash trading of that or people just going back and forth, but that I think will be a very important metric moving forward. RWA, TVL, I think specifically could be very important. And then one level below is the actual volume of that RWA, right? Or how much leverage is provided against that RWA, meaning the utility of that RWA versus just the TVL itself. And I think, the number of new L1s that are launching, I think is obviously super important, but I'm definitely way more focused on quality versus quantity. I'd love to see Avalanche have, even next year, if we're talking 5 super, super widely used L1s versus 100, 200 that are kind of in between.
So super quickly, because I think we're up on time. I think the only thing that really matters is developers. Like all of this stuff matters, right? But more developers. I want this room to be more packed next year. I want it to be more of you to have, 1,500 engineers that are all working for you, and that we just have a really, really robust ecosystem, because everything else will follow.
Well, thank you guys. Very interesting conversation. Thank you for joining. These guys will be around if you have any follow-up questions. Thanks.
Thank you.